Good morning, traders. Welcome to today's market update for March 18. Today, we are diving into the latest market movements and key updates on four major assets: the US dollar index, crude oil, spot gold, and Aussie dollar. Let's break down the key market moves and what's driving them. So, starting with the US dollar index, the dollar has been under some pressure this week as investors absorb the weaker than expected retail sales data and anticipated key political events. On Tuesday, President Trump will be meeting with Russian President Putin, while traders are also waiting for the Fed's policy update on Wednesday. Inflation expectations has risen sharply, now at 4.9% from 4.3%, suggesting the market might revise its outlook on the pace of the future rate cut. Despite these pressures, the DXY's volatility has decreased. The index is struggling to break through the key levels. It is hovering near 104 with potential support around 103, and the lower Bollinger Band sitting at 102.81. A break above the 104 could signal a rebound, possibly aiming for 104.3. But with the overall trend still weak, it will be crucial to watch for any shift in the sentiment following the Fed's decision. Next, turning into crude oil, which hit a new weekly high of 68.1 on Monday, driven by the expectations that China's new monetary stimulus will boost the consumption. However, despite the initial strength, oil prices have remained largely as unchanged since last Friday, with geopolitical concerns and oversupply fears still weighing on the market sentiment. The International Energy Agency recently warned of potential oversupply in 2025 due to the increased US production and weak demand. Technically, oil remains stuck in a consolidation phase. The daily chart shows prices between the Bollinger Band's middle and lower tracks, reflecting a weak shock pattern. Support is at 65, with resistance near 68.63, and the key psychological levels is around $70. For now, the market is caught between geopolitical risk support and the reality of an oversupplied market, making it difficult to predict a clear breakout. Turning to spot gold, the prices surged earlier in the North American section, briefly hitting a record high of 3005 before pulling back slightly due to the profit taking. Gold has risen nearly 14% this year, driven by the safe haven demand amid the economic concerns, including the weaker US data and ongoing geopolitical tensions. Additionally, central bank gold purchases, especially from the Asian nations, have provided support. Looking at the technical side, the gold market is in a battle between strong fundamental support and potential short term corrections. The MAC indicator remains very bullish, but the RSI is nearly overbought territory. It means a potential pullback can occur. Immediate support lies at 2956, with resistance nearly 3012. If gold can hold about $3,000, we may see new highs, but a dip below this could trigger future technical selling. Finally, we have the Aussie dollar pair, which saw a sharp rally on Monday following the China's monetary stimulus plan, boosting the liquidity and improving the risk sentiment. The Australian dollar has been supported by the potential for a ceasefire agreement between the President Trump and Putin. The pair is now hovering slightly below 0.64, maintaining a very bullish outlook. So technically, Aussie dollar is in an ascending channel on the daily chart with the 14-day RSI above 55, suggesting the bullish trend is intact. Support levels are at a 100-day moving average of 0.6346 and the psychological level of 0.63. On the upside, a break above the 120-day moving average at 0.6408 could push the pair towards the 200-day moving average at 0.6521. With key events ahead, including the Fed's policy update, the Aussie dollar could see further volatility. To wrap up, today's market is shaped by geopolitical risk, economic data, and central bank moves. Stay tuned for updates and have a great trading day ahead.